Afternoon, everybody. It's almost 11 o'clock here. I just saw Amy's message about the Fibonacci Defense Level and what she's learning at Ment.com. So I'm going to try to answer your questions, Amy, and you're doing everything right. Okay, I got to tell you, you're doing almost everything perfectly. We're going to go ahead and draw these ranges, basically highlighting the Fibonacci Defense Levels right here. I'll draw it across this level. And copy and paste, put another one up here. Now, in theory, price is going to move up and down between these defense levels, trying to make a move to a potentially new high or new low. But in the same process, you have to be aware that we have now this high setting up. And this is what you're going to be aware of in the sense that each of these independent Fibonacci levels, the 618, the 50, and the 382, operate as potentially unique thresholds for price. So in this case, you can see we stalled out right here. You see we stalled on our way down and played out in this area as, let's call it, a breakdown level. Okay, so come over here and we stalled. So let's not call it a breakdown level. Let's just say that, well, we can label it a breakdown level. The rally broke down at this point instead of moving all the way up to here. So at this point, we have this key rejection point, which acts as a major resistance area. So in reality, as price showed you right here that it failed and moved down, that again will play out in the future as a key rejection level to watch for. If you get up into this level and it rejects and moves back down, you're likely going to come back down to this defense level. And you see how price attempted to move below the defense level and then rallied. This happens. The defense level is like water. But again, these levels, these defense levels, as you're following this trend, you also want to pay attention to potential previous defense levels that would be playing out. So you can just as easily come back over here and identify that we have a defense level down here, which is acting as major support. And we have a defense level up here acting as major resistance. Notice how that defense level plays into the previous defense level. Now, understand that we also have an intermediate one coming around this area. So we have another defense level moving from here to here. This is what I was trying to show George Gonzo yesterday, is that Fibonacci layers in to price. So you have another failure level or resistance level right up here. You have another support level right down here. And we could keep going. I could keep picking these things out, but you want to look for the ones that are most relevant. So I'm going to pick this one, which is right in the middle. And I'm going to show you here that we have a potential support level right here. And we have a potential resistance area right up here. So now, once you understand how all of these breakdown or defense levels work, you can see if I get rid of the Fibonacci lines to clean things up, I'll leave that one for now. You can see that you have massive support down in this area with these two. You have intermediate support right here. Change this, maybe make it a little medium dark green. Get rid of the line. And so here you have this scenario where you can see the resistance stacking up here. You can see the support stacking down here, deep down here. These are great buys down here around this lower support. And it tells you that you've got this intermediate support right here at the 50% level, which happened to stall out. Okay. It didn't, well, it would have aligned with some of these other ranges in here. Like, for example, I can pretty much tell you that, from here to here, look at the support level here in the defense zones, right where your top is. But everything is structural. Price is all structural. So at this point, trading these rotations from, this low or down here near this low up potentially into this area. Same thing here, up into anywhere up here. You get 3 attempts here to the upside, and you theoretically could go short here to the downside, because this is once you get this first confirmation here of this top moving down, you can repeat the cycle, may repeat until it breaks. It will repeat. So understand that price must move above this high in order to try to go higher, or must move below this low on a strong close to try to move lower. Otherwise, it's going to roll within this channel. Now, each one of these swings sets up an independent zone. So you remember, you're going to have these reconfirming zones, which means, in theory, based on this zone here, just to draw it, you have an immediate resistance inside of this area, right in that area. Make it purple. And you have support right down there in that area. Make it dark blue. So you see here, Amy, the reality is your target zone really becomes this lower area, anywhere between here and here for buys, and anywhere between here and here for sells. So this gives you the idea that really you can be buying comfortably anywhere at or below this level, as long as this zone stays, and you can be selling comfortably anywhere at or above this level. Now, the theory would be is that you would place your stops somewhere up here on the short side, and somewhere down here below this lower support on the long side, so that you have the ability to trade comfortably within this range. Understand that buying in this area gives you a zone of, and this is what you want to remember, how much you're risking for how much you're targeting. So let's say you buy in this zone and you've got that as your risk, that big, I'll make it a yellow box so you can see it. Bright yellow box, that's your risk. Okay, now you want to try to make sure that your target level is at least a 1.2 to 1.3 to 1. This is a 1-to-1 ratio. So if my target level would be up here, then I'm about 1.2 to 1.3. So what I would urge you again is that you want to try to eliminate your risk. So you could run with a larger risk down at this level, your stop level down here initially. But once you clear this defense zone right here and start moving up into this defense zone, which is right here, then I would suggest you move your stop level up to eliminate risk. You want to try to get to basically a 1.3 or 1.5 to 1 ratio in your trade as efficiently as you can, because that will help you eliminate risk. You do not want to continue to trade with excessive risk. You want to get your risk down if you can, at a 1.3 or 1.5 to 1 ratio as quickly and as efficiently as you can. So that means that you are targeting $1.30 for every dollar you risk. And the way you do that is basically you measure your risk range and your target range, and then your target range should be 1.3 to 1.5 times your risk range. Okay? So that gives you an idea of how you can trade this. Obviously, depending on how you trade it and where you trade it, your risk is going to have to be adaptive But what you're going to have here is a scenario where if you keep your stop level down below this support level and keep your risk or your stop level for shorts up above these two resistance areas, that's a fairly safe move. If you're wrong, your price continues to rally, yeah, it's going to work against you. But as long as you continue to stay in this range, hopefully you can see that buying below this, call it dark green level right here, at or below that level, and selling at or above this level is a great trading range. So theoretically, buying down in this level is fine as long as you can keep your stop within reason. Start small, maybe add a little more if it drops down a bit. As long as your stop is still protected and you know this zone is in place, you don't get a closing price low below these lows down here, then you're fairly safe to see some sort of a bounce to the upside. Price always seeks new highs and new lows. So when you get down to these lower support areas, just because you got down here doesn't mean it's guaranteed a bottom, but it means that when you get down here, if it is going to fail and reject, failing to reach a new low and move back up, then it's going to do so in this lower channel. So you can imagine, I don't want to keep drawing, but if it's going to fail and reject, it's going to do so kind of in this area. Okay, it'll do so in that area, meaning that's where price will typically end and reverse because that's the support zone. That's the area where price is going to attempt to get below the lower areas. And if it can't, it'll turn around, reject, and go higher. Same thing here. Price is going to attempt to move up to this area, likely, and try to potentially reverse to the downside. In doing so, you have an area right here where price will likely reject and move to the downside. So picking and being able to sell into these upper areas, knowing that you have this potential move with low risk is critical. That's kind of like what I did on the SPY today. Okay, so you come over here. I don't know what I have drawings on this. Okay, I have a bunch of drawings, just ignore them. But this is 4 hour, and we had opened up down here in this low today. I had an indication we were going to get an upward move. We don't have the upward move yet. Remember, it was a flat down day, meaning we could stay down in this lower channel. I think we're going to reject and move back higher. So buying down here where I have a fairly low risk, where I could turn around and say, look, my risk level is here, might get a gap up on the weekend, might not, but I'm taking what I call a very low risk trade, because if the S&P moves, if my risk level in theory from entry is maybe down here, whatever may happen over the weekend, and my modeling systems tell me price is going to move up to 687 or higher, you can see that I have essentially a 2-to-1 or 2.2-to-1 risk reward ratio. My upside is 2.5 times roughly, or 2.2 times my risk scenario. Now I'm willing to take the risk because under options, I can try to control the risk. How much did I place into the trade? How much time do I give myself to see if it's going to work out? And what do I feel is really going to take place in this trade? So at this point, I can decide how much I want to put in the trade. I can extend the trade out 10, 15, 20 days, giving myself more time, which means that I won't have as much deterioration of capital. And if I give myself this opportunity, I'm looking at, over a 10-day, 7 to 10 day window, a risk of maybe 10 points, 8 points, and a success of maybe 16, 17 points or more. And I like that. I can take that risk comfortably and not really worry about it because I know by controlling the size of my trades, I can determine how much risk I'm actually taking in the position. So you're doing everything right. Come back over here to the QQQ. You're doing everything right. I just want you to try to see it as layers, okay? Try to see it as layers that are stacking up on the chart. And when these layers stack up on the chart based on Fibonacci structure, and I've drawn, the last 5 or 6 of them, you can see how price moves through rotation, sets up these zones, and then, like I said, if we're going to break through to the upside, we're going to have to get through every single one of these zones to get up and move higher. If we're going to break through to the downside, we got to get through every single one of these zones to break downward. Now, until then, we're going to stay trapped within these zones. We could shift between this zone and this zone, and it could suddenly say, okay, we're going to try to push a little higher. And guess what that'll mean? That'll mean that you'll get a move up into here, and maybe the lower range will move up into here. And now that becomes your trading range in theory. And that's how Fibonacci works. Fibonacci is always zoning like this. And then typically you have to watch for what's called higher high, higher low type formations. So as you can see, when we get into these zones, we're still establishing those zones of support and resistance based on range. But price is essentially stepping higher, moves over, stalls, steps, move over, stalls, steps higher, 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 and then finally moves into that congestion zone. So you must be aware that when price fails, now let's take a look at this, okay? Let's take a look at this just so you understand how this works. All right, Brad. Well, where's my defense zones? Oh, gee. Look, we came up, we blew through the defense zone, paused, hit a lower low, came back down to 618. Never reached this lower zone. Rallied back up above the defense zone right here, pushed up to new highs, and at that point, right here, we know that we're continuing to the upside. Now we get the next big move up to here and to this low. Rallies up, comes right back down to the defense zone, stalls, fails to get below it, rallies back to the upside. We know we're potentially going higher. Okay, fine. So this is an area where the defense zone acted as support and continued to move higher. Now we look at this one, up to this area and to this area. You see how we moved slightly below the defense zone, rallied back up right here, bounced bottomed, rallied, stalled, rejected, bounced off the defense zone, rallied higher. We know we're going higher. You see how the defense zones continue to work? So here we come up to this high and off of this low, which is the lowest point here. And you can see that we come down, we dance around the defense level, eventually get to the 382 level, rally and gap up above it. We know we're going higher at that point because we've bounced off the defense level, have a closing price high. Again, study the Fibonacci price theory videos. And again, we come up here and over to here. And you can see broke down, gap below the defense level, ran down to the 50% level, stalled, worked our way back up above the defense level. At this point, we become bullish, looking for a breakaway high close, get a little bit of one right here, and then eventually get one right here. Okay, technically we're bullish. And what happens is we roll a little higher, again, setting up a zone, pulling back into the defense zone from before, into the defense zone back over here, and then rallying again. So the defense zones really do play an active role in price. They are essentially that key Fibonacci level where price will either break through or reject and go the other direction. So I'm hoping this helps. At least I'm trying to help you understand what you're doing, and I want you to learn from experience. You'll be able to really, understand how these defense zones work as you learn to actually use them more effectively. Okay, again, hope this helps. Go get some. Have a good weekend.